Today we will look at the problem on process costing. In the previous class we have already seen the theory part of it, so we will look at the problem. The format of the process costing is that of the P&L account. All the expenses will appear on the debit side and all the income will appear on the credit side. So just keep this in mind. So now what they are telling, from the following details you are supposed to prepare abnormal loss account. So that is, we need to prepare the process costing. From that we need to prepare abnormal loss account as well. Now they are telling the value of material is 30,000. This is nothing but the expense. So expense will appear on the debit side of the process account. So labor, it is 10,000. This will also appear on the debit side. Overheads 7,000, this will also appear on the debit side. Now input, see there are two terms, one is input and one is output. Input is nothing but the raw materials that you are going to introduce into the process, that is known as input. Output is nothing but the value of finished good. This input will always appear on the debit side and the value of output will always appear on the credit side. Now what is the value of input? 20,000 units at rupees 1 per unit. And the normal loss is 10%. That means out of the input that you are given 20,000, out of this 20,000, 10%. So 20,000 into 10% will come up to 2,000. That 2,000 is nothing but the normal loss. Sale of scrap. Sale of scrap in the sense, the value of this value which I have discussed as 2,000. That 2,000 is again sold. So by selling, how much you are getting? Rupees 1 per unit. And then we have output. Output is nothing but the value of the finished product, or in some of the cases this might be transferred to a different process also, but they have not given any details about it. And the value of 7,000 will appear on the credit side of your process account. Now this is the pro forma of a process account. So we have debit and credit, particulars, units and amount, particulars, units and amount. So first, always start off with the problem with the value of materials or the raw materials that you have introduced. So to materials introduced, what is the input value? 20,000 units at rupees 1 per unit. So 20,000 into 1 will give you 20,000 itself. So what is the value of material is 30,000. So 30,000 have taken here. Labor is 10,000. So labor have taken here as 10,000, and the value of overheads is 7,000. That 7,000 I have taken here. Alright, now we are done with the debit side of the process account. Now we will move on to the next adjustment. They are telling normal loss is 10%. Normal loss in the sense, how much is the material that I have introduced? 20,000. So 20,000 into 10% if you do, we will get the value as 2,000. This 2,000 is nothing but the normal loss. Now again they are telling sale of scrap. Scrap value is nothing but the loss value, rupees 1 per unit. That means this 2,000 is sold at rupees 1. So 2,000 into 1 will give you 2,000 itself. See, if in case they are telling the value of scrap is 2, 2,000 multiplied by 2 will be 4,000. That amount will appear here. Okay. Now then they are telling output as 70,000. That output is what I have taken it as 17,000. And then we need to prepare only this much. This amount of 62,500 will be the balancing figure. Okay. Now balancing figure in the sense, we need to find out the value of abnormal loss now. Once we get the value of abnormal loss, and we will be able to find out this value. Alright. Now what is the formula to calculate abnormal loss? Now look here. This is the formula to calculate the abnormal loss. So the value of abnormal loss is normal cost divided by normal output into abnormal loss units. Okay. How do we find out this normal cost? Total debit value minus the normal loss value. Now look, in this case what is the total debit value? Total debit value is nothing but the details of your expenses. In this case, expenses is nothing but material 30,000, labor 10,000, and 7,000 if you had 47,000. That is what I have taken here, minus the normal loss value. What is the loss value that we have calculated here? It is 2,000. So minus 2,000 divided by Now we need to find out the value of normal output. What is the formula to calculate normal output? Look here, input units. So what is the input units? It is 20,000. That 20,000 is what I have taken here, minus the normal loss units. So what is the normal loss units? It is 2000. So minus 2000 into abnormal loss units. Now this is what we need to find out. Now how do we find out this abnormal loss unit? How did we get this 1000 rupees as abnormal loss unit? See, 20,000 is the materials that I have introduced. Okay, out of 20,000, what is the loss value that we have calculated? 2000 minus 2000. Okay, now 20,000 minus 2000 is 18,000. Now out of that 18,000, what is the output? How much is the finished product that I have got? I have got 17,000. Now 18,000 minus 17,000 is 1000. This 1000 is what I have taken here, which is nothing but the abnormal loss units. Alright. Now if you calculate 45,000 divided by 18,000 into 1000. Now look here, we will do the calculation. So 45,000 divided by 18,000, which is this 18,000 into 1000, if we do, we will get 2,500. That 2,500 is what I have taken here. Now how much is the abnormal loss units? It is 1000. That is what I have taken here. And what is the value of this 1000 units? 2,500. That is what I have taken here. Now we need to balance between debit and credit side. See, as I told earlier, now we got 1000 and 2,500. This will be the balancing figure now. Okay, 20,000 units, we will get both the debit and credit side. Debit side total is more, which is 67,000. Write that 67,000. Now 67,000 minus 2,000. Now look here, 67,000 minus this 2,000 minus this 2,500 will give you 62,500. That 62,500 is what I have taken here. Okay. Now we are done with the preparation of process account. Next we need to move on to the abnormal loss account, because what is that they have asked in the question? Prepare abnormal loss account. So we need to prepare abnormal loss account. Now see, abnormal loss account to process account. Now what is the value of abnormal loss? See, if abnormal loss is appearing on the credit side process account, in the abnormal loss account this will appear on the debit side. It is just the opposite. Okay. So what is the value of abnormal loss? 1000. And what is the amount? Amount is 2,500, which is I am carrying forward from this particular process. Then they are telling the loss value or the scrap value which will be sold at 1. Look in the question, sale of scrap, this is rupees 1 per unit, which means I am selling this 1000 rupees at rupees 1 per unit. Now sales value will always appear on the credit side. So by sale of scrap 1000 into 1, you will get 1000 and 1000. Now we need to balance. So debit side total is more 2,500. So 2,500 minus 1000 will come up to 1,500. This 1,500 will be transferred to P&L account, usually which is costing P&L account.